We're to talk to you guys about DATs today. Anybody know what a DAT is? You guys heard about these things that are happening? We've worked on a number of them. I'll introduce myself, and then I'll let the guys introduce themselves as well. And Chris, I'm one of the founders of DNA. We've been working on a number of digital asset treasuries. We've gone through the process with two separate digital asset treasuries, one that failed and one that worked and was successful. I'll walk you through why the first one failed, and I'll work you through what was successful on the second one. And then I'll let Max and Mario introduce themselves and give a little background on where they come from.
Great. Hello, my name is Mario, and I'm the CEO of Harbor Industrial Capital. We are a crypto-focused fund, so we run two funds, and we invest a lot in the Polkadot ecosystem. Before that, I was with Bank of China, 15 years running international capital markets, so fundraising for corporates, governments, in all types of structures, equity-linked debt, And my name is Max, running the fund together with Mario. So as I said, we're very close to the Polkadot ecosystem. In fact, we just came over from Sub-Zero, like another Polkadot conference in town here during Devconnect. And we've been doing this for about 4 years now. So we've got like the first fund, which primarily invested in parachain auctions at the beginning, which was kind of the way of allocating resources, of allocating block space in the ecosystem. Also quite interesting, by the way, as a side note, to meet all the BitTensor guys today. Because as many of you guys will know, Polkadot and BitTensor have a bit of a shared history. So it's quite interesting to be here and learn a little bit what the BitTensor community has been up to lately and to reconnect a little bit. So kind of subnets here. In Polkadot, we're talking about parachains. So that's kind of the paradigm there. And now more generally core time, which is a more agile way of thinking about rollups. So this was kind of our fund fund one, and then fund two, which just launched earlier this year, with the Web3 Foundation, which is the foundation behind Polkadot, and Kusama being our initial LP. And so with that, we've been quite actively investing in early stage startups building on Polkadot. I can get more into that later, but yeah. That's it in a nutshell.
So I think maybe we'll start off kind of just a basic definition of the DAT space and what's happened in the public markets. I think in the United States, we had this built up tension around public markets and crypto working together because of the administration that was in the United States and the inability for those crypto companies to use the traditional capital markets to go and raise capital. So there was a lot of people wondering ways by which to accomplish this, and there's nothing that the bankers in the United States are better at than figuring out how to financial engineer anything. And so, they created the opportunity for public companies to leverage the interest in crypto and bring that into digital asset treasuries and to take them almost as if it is just a pure asset play around a certain amount of value of crypto, taking that crypto, putting it into a public company, and then defining that value of that public company by the net asset value of that particular company. And that was all the rage for around 4 months, right? So everybody wanted to do one. Every single public company in the United States that was in trouble and needed to save itself was talking to some token of some sort and being pitched the idea of doing a treasury transaction. And, there's a lot of them happened, and they happened fast and furious. And the crypto people also took advantage of that because they saw the opportunity to take advantage of the demand on the capital side. And so you had a lot of demand that was coming in from the capital side being allocated towards these public companies that were willing to put certain treasuries in. Most of the time, the treasuries that were getting created from people that bought these things at a significant discount and were putting them into the public companies, although it seemed like at a discount, still at a premium to where they ended up buying them out of bankruptcy or from the government or whatever they did, especially in some of these largest financial transactions that took place. So it created this whole model of this ecosystem to finance these public companies with crypto. And then it started with Bitcoin, went to Solana, kind of worked its way down the pecking order of things. And then now that's kind of where we sit today. And then we met in the process of discussing the possibility of doing a DAT for Polkadot and, doing something along the way. So before I get into some of the deals that we worked on, I'll ask you guys kind of like, where do you see it now? Like you went through this period of seeing the ecosystem go through this process that I just talked about. So where do you guys see the DApp market now, and where do you think the opportunity exists not only for Polkadot but for other providers of tokens?
Yeah, maybe I'll kick it off and then Mario, you'll add on. So obviously now with the benefit of hindsight, it's easy to say it's good that Polkadot has not launched a DAT yet, because basically all the DATs out there are underwater. The ones that launched earlier this year, even MicroStrategy, as a matter of fact, has an MNAV below 1 now, which I guess caught some people by surprise. They just thought thing number is only going up. I mean the MNAV number here, not the underlying. But obviously, this can come down very much as well. And MNAV is sort of the future valuation of like everything that is wrapped around the underlying asset. And there are different ways to generate yield, and I guess some of these projects failed to do so, right? And that's why they're trading at below MNAV. It's of course in many ways kind of surprising, right? You would always say it's very easy to measure how much those assets are worth, where they should be valued, because these are all public assets. I mean, Bitcoin, Ethereum, Solana, right? When they start trading below 1, right, then something is going wrong, right? If the expenses are too high, maybe the market doesn't believe in the management. Could be all kind of reasons, but it's obviously not like a particularly promising sign. Now, having said that, right, does that mean that the DApp market is DApp? I don't think so, right? As usual, these things move in cycles, and as long as there is like a strong and convincing business model for why you would want to hold the asset through a DAT structure rather than directly spot, then this structure does make sense. And I think there are multiple reasons why MNAV above 1 can be very well justified, right? I guess sort of two areas to look at, right? One is like the cost of financing, right? Oftentimes it can be cheaper to finance some sort of capital market, like to raise money in the capital markets at very attractive rates. I mean, that's kind of what MicroStrategy did. They're a listed company. They have a high credit worthiness. So yeah, they can borrow cheap cash and then use it to put Bitcoin on their balance sheet, right? So that's kind of one side of things, right? The capital market efficiency. And then the other thing is, of course, like the whole operational side of things. So, the obvious thing is staking, right? You can stake your assets. You can maybe be a little bit smarter than the average retail user about validator selection. And then there is, of course, the entire DeFi space, right? And for example, for Polkadot, right, it's not like an isolated chain. It's not just like a single, a single chain, but Polkadot in many ways is a chain of chain. And so you have an entire ecosystem, right? And you have different like liquidity pools, you have different AMMs, and there are like ways, of course, to generate like a yield in dot terms that is, significantly outperforming staking rewards at a very attractive risk-adjusted rate. Right? Can be difficult for both retail and institutional investors to replicate, and therefore to just wrap it into like a listed company can make a lot of sense and can actually make quite an attractive buy. So yeah, let me pause here.
Maybe to add on, I think before setting up any debt, people should think about what's the main purpose of this. Huh? So of course, you see MicroStrategy and then like probably hundreds of copycats around the world who wanted to use it as a tool basically to capture funds from the capital market and artificially inflate the MNAV. And there have been other debts which have been working with the foundation on more sustainable models. So without getting into too much into the plans of what Polkadot is doing, because I think Polkadot has always been a very sustainable and long-term thinking ecosystem, and the Web3 Foundation definitely has the strategy to think in the long term rather than jumping on short-term market trends. So I would see Polkadot more in the packet of those that want to, if they were to be a debt in the future, to be it a long-term vehicle to access additional capital from the capital markets, to channel to projects into the ecosystem, lower funding rates. And then you need to ask yourself, where's the premium coming from? Yeah, it's from yields, but also from access. So at the moment, what we're seeing in those debts is either it's crypto natives that aspire into the debts or retail. We haven't really seen that much institutional. So I think to go down the road of debts, it has to be the end goal to get actually access to institutional capital. Talking about pension funds, insurances, people who otherwise could not access your product. And then this capital can flow back into the ecosystem to support developers and help drive valuations there.
So one of the things that happens when you do these public companies is they, in the historical sense of the way they've been getting done, is the company that is willing to do this transaction with people has a reason it's willing to do a deal in this way, right? It's a failed biotech company or it's some other kind of transaction that didn't succeed. And this is phase one, right? These companies were needed to do a deal in order for them to survive. So they saved themselves by doing this large transaction, and they brought in a lot of assets. And now what you're starting to see is these assets getting spun off from these public companies into a private company or just closed altogether, just so that the negative cash flow from those businesses doesn't eat against the MNAV in their entirety. Now what's happening is there's not such this rush to get to market because the market's cooled off a little bit, that there's an opportunity for treasuries to be created correctly. And it's not a rush to market. So the entities that want to do these transactions can file an S1, can partner with another successful public company that's not in dire needs for cash and take the time to spin off a sub or create some other financing that is favorable, that isn't going to require negative cash flow that's going to eat against the MNAV or the net asset value in the future. So I think that's kind of the next phase that we're going to see. Then on top of that, what was the NASDAQ and the SEC was changing the rules as these things were happening in real time, because so much was happening, so many were coming into play as this was going on, and they didn't know the rules. They didn't know what was happening and how to do it. So they were making the rules up as these deals were getting done, right? So the first thing that was happening was there was this massive amount of in-kind contributions getting put into these public companies. under the context that everybody was staying below 20% ownership in the deal, which is a threshold inside of NASDAQ that requires no shareholder approval. So you had all of these deals that were taking in-kind contributions at an at market or above market price that was then not requiring them to go get shareholder approval for these transactions. The first 20 or 30 of them got done like that. And then NASDAQ said, whoa, 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 whoa. If you want to take in-kind contributions, you need to get shareholder approval for those. So there's no more just contribute, $1 billion into this thing and don't get approval from the shareholders. That was like step one. Then they said, okay, you can no longer put in this like face of the transaction that's going to replace the CEO right away. That's then going to, day two is going to start off and is all of a sudden going to be the one that's going to get everybody in retail to buy this thing. They put a rule in against that. So you couldn't do that anymore. Then all the investors started thinking, well, there's got to be a model here. There's got to be a business operation inside of this DAT that's more important than just the asset itself. So what is and that's, I think where we find ourselves now inside of these DATs is like, what is the asset that is going into the DAT? What is the operating business that's in the DAT? And could that operating business get public on its own if it wasn't merging into this company? Can you start a public company from scratch with an S1 filed with the SEC? And would the SEC approve that as a public company? And could it maintain itself on a yield basis with revenue in a public company? And that's where the market is today. And the next two transactions that we're working on are very focused around that being part of a real business. So the revenue, the yield that these guys are talking about that is being generated off of that has to be a real business. It has to generate some kind of real business. So in the last one that we did with Aether is a token that allows you to buy compute. So the business itself is focused around compute and taking compute into an ecosystem. So this particular DAT will, in the transactions that we have alone, will be able to do $100 million a year in revenue from the compute that we're putting into the ecosystem. So it's not just the value of the underlying token that is driving the value of the public company. It's the business. And if you look at this, you have, if we could do $100 million in revenue through this ecosystem of a DAT, you have other GPU providers that are trading at 19 to 65 times sales. And this is a company that is just using a token to get there. Can this company trade at even the lowest end multiple of that ecosystem would be a $45 stock price for this particular company? So I think that whatever we get done next has to kind of like follow in the footsteps of creating that kind of model. So how does Polkadot, besides just yield, right? Like what gets created that creates that kind of public company attention and real business?
Love it. Yeah, I think that's a great question. So one of the lines I always like to say is Polkadot is the AWS for Web3. Now, what do I mean with that? Right, and AWS obviously is like a real business, so to speak, right? The ones that you're referring to that could sustain itself. And that's kind of where I'm going to with this analogy. So maybe a little bit of background here because, So like Gavin Wood, right, the founder of Polkadot, there's one thing he always likes to say, which is a blockchain is actually it's actually a computer. Like to think of a blockchain, a great analogy is a computer, right? That's kind of what it does. It runs like on multiple cores, on multiple machines, but kind of to think, like a good way to think of a blockchain is to think of a computer. Now, Bitcoin, right, the first blockchain-based protocol, is of course a very simple computer in the sense that it adds up, the number of Bitcoins you send and receive, right? And then it does the computation, and then how many Bitcoins do you end up holding in the end. Ethereum, right, of which Kevin was also the co-founder and first CTO, adds some more logic to that computer, right? Sort of moving from like a calculator, right, to like a basic desktop computer, where you can say things like if, then, if this value is larger than this, then do that, right? So getting some computation logic to it, but it's still kind of like a decentralized computer, right? If you think of, the original Ethereum vision back then in 2016 or 17, it talked a lot about like the world's kind of decentralized supercomputer. But then they kind of moved away from this narrative again because they realized like Ethereum cannot deliver on that, and then they focused on other things such as, simple smart contracts, on token launches, on NFTs, whatnot. Now, Polkadot, right, in its current version, is of course like already like a much more advanced protocol, but it is also going through a very important upgrade, which is called the JAM upgrade, which is just about to be rolled out, probably like early next year. JAM, J-A-M, which stands for Join Accumulate Machine. And to continue with this analogy, right, from like Bitcoin as a calculator and Ethereum as a computer, Polkadot, right, and especially like Polkadot JAM, is kind of moving to like a decentralized server architecture, not by building something on top, but taking one step back and making it more general, right? That's kind of the interesting thing about Polkadot JAM. It's a generalization, right, of a computation level that allows developers to run like literally any kind of machine readable code on top of it, right? So Gavin made like an interesting point the other day when he was running Doom, like the ego shooter game, on JAM, right? Like running it on a decentralized computer. And obviously Doom wasn't written for JAM, right? By definition. It came long before. But it just shows that you can literally run like one of these like old school games on a blockchain, right? This is something that, Ethereum can only dream of. And it's possible, right? Because it's this abstract kind of decentralized, global, distributed, resilient computer. And that's kind of where this analogy of Polkadot as the AWS for Web3 is coming from, right? It is a real business. It's a computer on which you can run kind of any type of application that you want, right? In a decentralized, in a trustless fashion. And that's very powerful. And I think that's the real business that we're moving to. Block space is the resource, right? That's kind of what Polkadot is selling, is block space that is paid for in DOT. And the name for it in Polkadot terms is core time, but it's kind of, it's the time on the cores, right? Using the core. That's kind of what we're selling. And that's kind of the real business that we're talking about here. And, the idea that we were discussing about is essentially wrapping that real business into that.
Yep. So if you look already at some of the applications that came out of Polkadot, because a lot of people saying like, okay, Polkadot, Kevin, obviously being the industry, one of the core industry visionaries. So what has it actually delivered? If you go and look actually with some of those parachains that did build on Polkadot in the past have become very successful projects, like Peak Network, right? Or like Itenso, which started out in the Polkadot field and went out now basically on its own. So we did have this successful cases already in the past, track record. But what Max just described is now the area of entry is being lowered. In the past, you had to get a slot for 2 years for an option process. It was quite costly at the beginning to get a slot of this block space, basically. So now with the hub launch and the JAM upgrade, basically the barriers of entry is coming down. So any application can basically you run on Polkadot, and not just if it's written in a certain language, but actually no matter what kind of code. So I think this is a massive change, not just for Polkadot, but actually for the whole industry.
So the business itself, would it have an interface where people can buy AWS kind of space? So you envision that?
Yeah, I think that's, and you buy it in DOT, right? Like that's kind of the currency you need to, it's called core time, like block space and core time are, kind of interchangeable, but like we use the word core time because it's time on a core, right? So Polkadot is a semi-coherent sharded system of multiple cores, right? Whereas like in most other ecosystem, you have like a single core, right? And everything is like revolving around that. It's like a way of scaling horizontally rather than vertically. Like that's kind of the whole idea, right? But then through incredibly smart cryptography, still create this semi-coherent state. Yeah, and then you have these multiple cores, and the idea, to answer your question, right? What if you're running an app or a app or like anything, right? Any program, any machine readable code, then you need to rent time on the core, right? The same way as you buy AWS credits to execute, whatever program you want in a centralized fashion. But this is truly like decentralized and immutable.
I know we're well over time, but if anybody has any questions about DATs, or we're happy to take a couple of questions now, or happy to talk to you guys afterwards as well. But if anybody has a question, you?
I have a question. On the Doom example, could you run something that's even more intensive, like
Quake?
or GTA 6 if it ever comes out? Like, could that run on Polkadot?
At the moment, not yet. But Quake, as a matter of fact, was like run just like very recently as well, just to make the point. Now, obviously, what's the end goal? The end goal is not to like run these kind of games or anything like on the blockchain. It would be an incredibly inefficient way of allocating resources, right? So that's not at all the point, right? You can do much. This was like on a test net, right? This was just like to prove the prowess of the Gem network. As I said, like look around, like on any other blockchain, you wouldn't be able to run it in the same way that Polkadot did. I mean, keep in mind, like, as I said, like Bitcoin, what it does is essentially like you have 5 Bitcoin, I send you one more, okay, then you have 6, right? That's a computation. Now, on the Jam network, you have on the same level in the stack, you have a computation that renders like an entire video screen, right? So that you have a playable video game, and like, it's not that you have a graphic CPU, but like the same type of blockchain, right? That, does what I just said for Bitcoin, renders every single pixel of a computer game, right? So that's kind of where we're in the stack. But as I said, the end goal here is not to, play fancy video games like on the blockchain, because it's kind of pretty pointless to do that, using a blockchain as a graphic card. It's just like, I guess, a proof of concept. But
I guess to be Amazon Web Service, you don't want to be a gaming chain. But could Facebook run their iPhone app on Polkadot instead of Amazon Web Service?
Yeah, I mean, you probably there isn't much of a point like to run everything on it on the blockchain, right? Because it's obviously, it's clear that the blockchain is, there's no comparison between like the throughput of a blockchain and like a centralized server. That's never gonna compute, right? But you can outsource like certain parts of the business logic, right? The really critical ones to a blockchain, right? And do at much more throughput than you have currently on Ethereum, even on Solana, right? Everyone thinks, Solana has like a very high throughput. In reality, like Polkadot has like a much higher throughput that isn't even like fully used up yet already. And then with the Gem upgrade, like you have an even higher one. So yeah, we will see what are actually the applications that are going to be built out there. But yeah,
because it's about what you actually need the blockchain for it, and then you, especially in the future, like proof of personhood. That's something that Gavin, for example, has been talking a lot. That you can prove that you are you, but without revealing your identity. And it's getting increasingly important to also think about like deep fakes in videos, with all the AI agents and so on. So it's more about where you use blockchain technology to prove those things so they're immutable. But then things like rendering graphics for like a game or something, you can still run like on a traditional modem.
50% of Amazon Web Service is out today, actually. Like half the internet's down.
Yeah, and 2 weeks ago it happened again, and Robinhood is down. Do you think maybe it could be a backup to stuff like that, or
yes,
you say exploited? Or...
But it's down
For core services, yeah. but think about like Google had last year an incident. You can look it up like in May 24, where like a Google employee deleted the data sets of the US pension fund. And then 500,000 retirees couldn't access their accounts for a week or two of them. And fortunately, they had a backup with a third-party provider because Google couldn't reconstruct it. So it's more about like sensitive data and things where you need to verify content for this kind of this. But also, yeah, you're right. For some of the social media aspects, it could be key to avoid censorship, right? So information cannot be censored. But then again, you may not need the rendering to be done on the blockchain, but the information to be there, so it can be pulled out of the chain.
Anybody else? A question? Yeah. So happy to talk to anybody about this afterwards. But thanks for listening. Appreciate it.
And to you guys. Thank you for